Hello and welcome back to the Financial Freedom Show. In this episode, we're going to discuss SPLG and why I'm buying it, and what that fund consists of. If you enjoyed the video, please be sure to leave a like and comment down below what you're doing with your portfolio. Are you buying SPLG? What are your plans for 2024? Let me know in the comments. I love to read the comments. And without further delay, let's get into this video. So, in my portfolio, I am currently at $22,754 across my Roth IRA and my regular account. Now, something that is really interesting that I didn't realize Fidelity did was show your performance over the long run. We can take a look at my performance over the past year, which is actually really helpful for seeing the overall big picture. I want to do this as much as possible so that I'm transparent with you guys on my gains and what's happening in my portfolio. If I'm having losses, I'll let you guys know what that's like. I'll just be completely transparent. But for the past year, as you can see, my portfolio has slightly beat being in cash. So what this does is it shows what your portfolio would be like if you just invested in nothing. You just stayed in cash and didn't invest anything in your account. So with this account, I would have had in blue here, I would have had a balance of $17,258 if I hadn't invested in anything at all. But because I invested in the market and continued to dollar cost average into index funds, I actually have a balance of $22,766, which is actually a huge change in my portfolio. If you take a look at my gains, I've actually made a total of $5,508 in gains in this portfolio ever since I started investing at the beginning of this year. And my deposits are $17,258. So you can definitely see that investing has really increased my portfolio overall this year so far. I did have that big dip this year where I bought a house, but I'm going to plan to have this account get back to all-time highs and continue to improve in the future. The gains might shrink a little bit if the market pulls back, but I'm looking to overall increase my deposits. So hopefully this account will continue to grow in the long term. My next short-term goal for this account is to get to 50,000 and then 100,000. As Charlie Munger would say, getting to 100,000 is the hardest part, but once you get to 100,000, your portfolio actually starts to make gains based on your funds that you deposited. So you're actually going to make incremental gains way easier and get to the next 200,000 goal way faster because you have more money invested. So I'm going to try to get to 100,000 as soon as possible and continue to grow this account from there. Hopefully you guys enjoy the journey with me, and we'll continue to be transparent on this channel. So let's get into the main point of this video. What is SPLG and why am I buying it in my portfolio? So SPLG is the S&P 500 index fund from the SPDR. So it's the same fund that makes SPY. They make SPLG, which is actually a portfolio version of that. So basically the share amount is lower than it is for SPY, letting you buy more shares. That's pretty much one of the only things that's different. The other thing is the expense ratio is a lot lower than SPY. The expense ratio for SPLG is actually only 0.02%. So it's one of the lowest S&P 500 index funds out there for expense ratios. So that's really exciting to have a lower expense ratio than VOO and SPY in this fund. And then the added benefit is having a lower share amount. So basically the share count right now is $55 per share. So I can get more shares, and it actually makes me feel like I'm making more progress towards compounding my account. When you have fractional shares, it doesn't feel like you're making as big of a dent as if you have like 100 shares of SPLG. Just from a personal perspective, but I mean, that doesn't really make any difference, like numbers wise. It's just more of a personal thing. Seeing my account grow the amount of shares is really motivational for me. So let's go a little deeper into this fund. We can see that the share count is $55.22 per share currently. And yes, the expense ratio is 0.02%. They have $23 billion in net assets under management, so that's a lot lower than SPY or VOO. So the volume is going to be a little bit lower, but hopefully that'll continue to increase once people realize that the expense ratio is lower than those two funds. If we go to the dividend, we can see that their current distribution is 22 cents per share, and that is on December 18th. So tomorrow, which is Monday, you guys will be seeing this video. That'll be when this dividend actually gets paid out from the S&P 500 fund, and that will be, once again, $22 per share. And I'm hoping to grow that. I know that it'll continue to increase over time because it's the S&P 500. The dividend will obviously continue to compound over the next couple of years. And I want to just get into this fund and build as many shares as I can so that I get a higher yield on cost than somebody that buys in the future. As you can see, they have 445 million shares outstanding. And here is a breakdown of the holdings in this fund. As you can see, Microsoft is the top holding at 7.3%, which is interesting because Microsoft just recently passed Apple in market cap. So that's definitely something to notice on this fund. And that's basically for every S&P 500 fund. This just tracks the S&P 500. So Microsoft is worth more than Apple, and that is why it has a larger share of the portfolio's holdings. If we get on this list, we can see the next highest is Amazon at 3.4%, Nvidia at 2.9%, Google at 2%, Meta at 1.8%, Tesla at 1.7%, Berkshire Hathaway at 1.7%, and United Health Group at 1.3%. There's a total of 506 holdings in this portfolio. So there might be at times more than 500 companies in the S&P 500 fund, and there might be less. It's just based on what companies they remove or add to the fund. There's certain guidelines they have to follow to be in the S&P 500. So some companies might have fallen out of those guidelines and they're going to be removed soon. Just depends totally on how many companies are in the fund. Right now it's at 506. If we compare this to the SPY, we can see that it actually had a higher percentage return in the past 52 weeks. And the same thing with VOO. That's because the expense ratio is a lot lower on SPLG than it is on SPY and VOO. It's going to have a larger percent return over the long run, and that's going to compound over the next couple years. So definitely worth considering if you're just starting out, if you want to purchase SPLG compared to SPY or VOO. It has a lower expense ratio, and over the long term, you're going to make more from that fund, even though you hold the same thing. It's just how much you're paying them to manage the fund. The net assets are not working on SPY or VOO for some reason, but as you can see, the gross expense ratio is 0.02% for SPLG, and SPY is 0.09%. VOO is 0.03%, so they're all more expensive than SPLG. That's one of the main reasons why I chose this fund, is because of the expense ratio is lower than SPY or VOO. As you can see, I have about $7,000 that are pending right now, and that's because I just had a swing trade on 3M that I probably shouldn't have done, but I'm going to try to add those back into SPLG, and that's going to increase my share count. I'm looking to keep about $10,000 in cash for emergencies, and then everything else is going to go into SPLG, and I'm going to continue to add to that position. I'm just going to continue to deposit money. At the beginning of next year, I'm actually going to put more money into my Roth IRA because it resets at the beginning of the year. You're able to put $6,500 into it, so it should be above $13,000. As you can see in my Roth IRA, I actually have about $511 in gains so far. That's because I put in $6,900 into VUG, which is the Vanguard Growth Fund, and that's going to be my main holding in my Roth IRA. I don't plan on adding to anything else except for VUG, just because it's such a long-term portfolio. Over the long run, I believe that's going to outperform. We can see that over the past couple weeks, I've been incrementally adding money into this portfolio, and that's really exciting. I continue to dollar cost average into these funds and hopefully see this portfolio continue to grow. Like I said, in the near term, my goal is to get this portfolio back up to all-time highs that it was at, and then continue to grow from there. And I'm really excited to see the compounding effect. I started to see it back when I first started. If we take a look at my Roth IRA, you can see that I had about $22,000 in there, and it continued to grow from just gains over the long run. I just kept it in there. And that big rally that we had in the beginning of this year, I actually gained about $5,000 in that account. And that's kind of where I started to see the growth of my portfolio based on how much money I had in it. I haven't really seen that much of a gain before. So it was definitely exciting to see that much of my account change. And I hope that comes back later whenever I get more money into this account. It's going to be exciting to see the ups and the downs, and I hope you guys are along for the journey. That's going to pretty much do it for today. If you guys enjoyed the video, please be sure to give it a like and subscribe in order to stay up to date with my portfolio. And hopefully leave a comment down below what you guys think about my portfolio, what your plans are for the future and for 2024. And I will see you guys next time.